Hello everyone. Good morning. My name is Manesh Kumar. Today is my assignment corporate accounting. Now my topic is about hotel property investment and objective of assignments. Hotel property investment is engaged in real activity. It got listed in 10th December 2013 on ASX. It has total 157.05 million shares outstanding and with market organizations of 436.59 million as on 6th June 2020. Now, number one, accounting profit. What is accounting profit? Basically, accounting profit is company total earnings computed as per the provisions of accounting standards issued in Australia by AASB. It includes the total of doing business such as operating expense, depreciations, and interest. Implicit cost is considered while calculating accounting profit. Implicit cost is not considered. Example, national cost is not taken into account. The accounting profit is the profit reflected in the profit and loss statement of company. Now, second is taxable profit. What is taxable profit? It is income on which income tax rate will be applied and tax will be calculated is the difference between the organization assessable income and allowable deductions. It is computed by treating the items of income and expenses as per the rules specified in Income Tax Assessment Act 1997. And now third is temporary difference. What is temporary difference? There are certain items which have different treatment in income tax and accounting. These difference in treatment causes certain difference to arise. These differences can be classified into permanent difference and temporary difference. Temporary differences are difference in treatment in an item of income or expenses under Taxation Act. These differences are temporary in nature and will reverse in later period. Accounting the temporary difference has to be done in the books. Temporary difference is of two types. Number one, taxable temporary difference, and number two, deductible temporary difference. And now third one is taxable temporary difference. Temporary difference, International Accounting Standard 12 paragraph 5 states that temporary difference that will be result in taxable amount. Temporary difference, now it will be added in computing the taxable income of future period at the time when the carrying amount of the asset or liability in respect to which the same has aroused is recovered or being settled. And now third one is and last one is deductible temporary difference. International Accounting Standards 12 paragraph 5 states that the temporary difference that will be result in deduction in determined taxable value. And now third is deferred tax asset. What is deferred tax asset? Deferred tax asset is created by temporary difference which will result in reducing income tax payable of future year and results in increase in income tax expenses of current year and provides future tax benefits. Deferred tax asset is a non-financial asset, which means it is not purchased, not created. For example, deferred tax asset is created on unused tax losses and unused credit. Deferred tax asset is created only of conditions of prudence is satisfied, which states that it can be created only when future income can be predicted to reverse the asset in future. Recognition criteria for asset: if the carrying amount is less than its tax, then deferred tax asset will be created. For liability, if the carrying amount is greater than the tax, less than deferred tax asset will be created. As per AASB 112, deferred tax asset should be not be created if it arises due to initial recognition of an item of asset and liability which is not the result of business combination, and also such as transaction has no effect, no accounting profit, non-taxable profit. Now the following deferred tax asset is recognition in the book: hotel property investment, plant and equipment, accrued expenses, and employee liability. And now 2019 12 and 2018 8, and the total is 84 for 2019 and 2018 93. And now what is deferred tax liability? Deferred tax liability is created temporary difference which will result in increasing income tax payable of future year. Recognition criteria for assets: if carrying amount is more than its base, then deferred tax liability will be created. For liability, if the carrying amount is lesser than tax base, then deferred tax liability will be created. As per ASP 120, deferred tax liability should not be created. It is arise due to initial recognition of an item asset of liability which is not result business combination, and also such transaction has no effect on accounting profit nor taxable profit. The joint venture operator, investor, or parent had the power to control the time when such taxable temporary difference can be reversed, and there should be probability that the temporary difference so aroused will not be reversed in the near future. And income tax expenses. Income tax as shown in the income statement. Breakup is shown below. Particular: current tax, deferred tax, tax expense from continuing operation. Tax is per accounting profit versus tax is per taxable profit. Reasons for difference. The difference shown above is majority because tax is not payable on income of trust. One more reason of the above difference is that permanent difference is not accounted for when tax is calculated on accounting income. Reconciliation of the above difference is shown as below. Example: tax is per accounting income 2090 14775. And what is income tax payable and tax expensive? Income tax payable recorded by hotel property investment in the balance sheet is nil. There is a difference between income tax payable and income tax expenses which is shown below. Tax paid and tax expenses. Income tax paid recorded by hotel property investment in its cash flow statement. Reasons of difference. Income tax paid reflect the advance tax paid by the company. It does not involve deferred tax asset and liability. Income tax expense shows the current tax expenses of the company. Income tax paid shown in the cash flow statement. Various income tax expenses is shown in this income statement. Thank you very much.